Everyone, welcome to the Governance and Audit Committee meeting of the 14th of March. This is a special meeting today to receive the audit accounts and Audit Wales letters. So if we can start with the agenda, apologies for absence, please.
Thank you, Chair. Apology from Councillor Paxton Hood-Williams.
Thank you. Any disclosures of interest?
Yes, please, Chair. Agenda item 4, Statement of Accounts 22-23. I'm a member of the Swansea Bay Port Authority, and also I'm a member of the pension fund and benefactor of the pension fund.
Thank you
and
very
it's
much.
personal interest.
Thank you very much. No further declarations. I'm not seeing any hands up. No.
Oh, Julie.
Julie?
Sorry, Chair, I'm a beneficiary of the pension scheme as well, so I don't know whether that needs to be declared.
Okay. Yeah, thank you. If we can move straight in then.
Sorry, Chair. Sam.
Oh.
Sam.
Sam, sorry, Sam.
Oh, hi, Chair. Yes, I would also like to declare an interest that I'm also a in beneficiary of the pension fund, so I pay into the pension scheme. Thank you, Chair.
Leslie Walton?
Yeah, exactly the same. Me too. So I'll be declaring personal interest.
Okay, thank you. No others? No. If we could move straight into the agenda, main items on the agenda then, and it's Audit Wales Audit of Accounts report for the City and County of Swansea. And can I welcome today the Audit Wales representative? We got Derwin and Leanne with us today. So I'm very grateful for your attendance for this important meeting. So if you can take us through your report, please, Derwin.
Branda, good afternoon, everybody. Thank you. So yes, it's my pleasure this afternoon to present to the committee the Audit Wales Audit of Accounts report. So this is the report that includes our main conclusions based on the work we've been doing the last few weeks to audit the draft statement of accounts for the council. I appreciate the turnaround of the papers was relatively short, so I will take members through in reasonable detail, page by page, so to make sure that members are fully cited of our conclusions in relation to our audit. I will start on page 4 of the report. And I guess as it sets out there in paragraph 3, I, as your external auditor, can never give absolute assurance that your accounts are free from misstatement. Instead, we work to an industry standard of materiality, and in accordance with that industry standard calculation, the figure for Swansea for this year is just over £11 million. There are a couple of items in the accounts where we do more detailed audit testing. The first is in relation to the senior officer pay, and the second of those is in relation to related party transactions, which relate to individual council members or to individual senior officers in the council. So that's the general context of how we undertake the audit. In terms of the timetable, the Welsh Government asked Council to produce their draft accounts for 22-23 by the end of July. Unfortunately, the accounts for Swansea were not received until the end of October. And of course, this is now the second year, as the committee would recognise, where the accounts are later than the prescribed Welsh Government deadline. So I think that is a cause for reflection. And indeed, as I would understand it, with the implementation of a new financial ledger during the 23-24 financial year, it will be a considerable challenge, I think, to meet the deadline for 23-24. So I think that's something which the committee may wish to reflect on in terms of the timetable. But over the last few weeks, we've been undertaking our audit work, and we are now substantially complete. I think at this point we're more or less done and dusted in terms of all our final checks as we head towards full council next week. I move to paragraph 10. And I guess the key conclusion which I'm offering the committee this afternoon is that subject to us receiving the letter of representation that is set out in Appendix 1, we intend to issue an unqualified audit opinion on the accounts. That is, an opinion that says that in the view of Audit Wales, the accounts do show a true and fair view of your financial transactions for the year and of your balances and liabilities at the year end. So good news in that context. In terms of where we are in terms of issues arising from the audit, I'm pleased to say, as we record in paragraph 14, all the amendments and misstatements we've identified during the course of the audit have been corrected by officers, and they're labelled in Appendix 3. There are a couple of material changes that have been made to the accounts, but they're set out in the appendix along with a variety of other amendments which we've identified. I don't think there's anything in that list. It's a relatively long list, but I don't think there's anything in there which causes me significant cause for concern. You'll understand that as you can see them in the papers, you know, the accounts of Swansea are large, they're complicated. So some level of misstatement is almost inevitable. I would also then finally just draw attention to members on paragraph 17, where we identified an error in relation to the revaluation of schools. I won't take members through the details other than to say, in accordance with RICS valuation guidance, you're required to revalue your properties on this modern equivalent asset basis. And we identified that for schools, the obsolescence factor of that basis hadn't been applied when it came to external works and to the professional fees, and therefore an amendment of close to £39 million was made to the draft accounts to correct for that valuation basis. But I think, Chair, on that basis, and indeed with thanks to Ben, to Amanda, to Jeff, and to the whole team at Swansea, who's we have a good, strong relationship with, I will pause and seek any questions which members wish to ask.
Thank you, Joanne. Obviously, it's very, very good news that it's an unqualified opinion, and I'd like to express my congratulations to Ben and the team for landing us in that position. I think it's also important to state that we were fully aware of the delay of time in producing the draft accounts, and this committee has been updated regularly by Ben, so we were aware of the situation, but the pressure at the time was, it was what it was to a point. It's not where this council wanted to be, I'm pretty sure of that, but I know they've worked extremely hard with all the factors that were in front of them with the new Oracle Fusion system and staffing issues and of the like. So I would like to pass on my congratulations, and I'm sure the committee would second me with those congratulations as well, Ben. I've got no particular questions on your paper. I don't know where anybody else. Councillor Leslie Walton.
Yeah, thanks, Chair. Just really want to echo the comments you've just made. I think Ben and his team are, for want of a better word, brilliant. I totally admire their work ethic and totally sympathise with the issues they've had to overcome. So I just echo again what you've just said.
Thank you, Councillor Walton. Are there any other questions, David?
Thanks, Chair. Good afternoon. Name's David Roberts, a lay member. Just on page 4, just in regard to Exhibit 1, which is the timetable, just outlining the first bullet point there about this being the second year running of the late submission of accounts. My question is twofold, really. One is, would the council in future years face some sort of penalty for this lateness? And the flip side of that is this timetable realistic in view of the current challenges financially? Or should the Welsh Government be looking at a revised yearly sort of timetable in regard to this? Is that July too challenging, not just for this council, but the councils in Wales, So it's a twofold question really. Is there penalties if this occurs again in subsequent years? And should the Welsh Government be looking at a revised timetable for these submissions? Thank you.
Derwin, do you want to answer that?
Yeah, thank you. No, good questions. In terms of, is there a penalty? No, there's no sanction. But of course, there are reputational matters because the committee would recognise that your statement of accounts is a key governance document. And for that to be prepared after the timetable prescribed is a reputationally damaging thing, I think would be fair to say. In terms of the timetable, it's fair to say that the timetable has come under significant pressures over the last 3 or 4 years, predominantly through the COVID. And the Welsh Government have been pretty flexible, I think, in terms of where they've been at. If you go back to 2019, pre-pandemic, you know, we were charging towards end of May preparation and end of July sign-off. That's the territory we were in. So I think there has been a fair bit of leniency, I think, from the Welsh Government in relation to timetabling. I think on the whole, and I do recognise the point of there are a myriad of challenges which all councils are facing, not least of which are financial. I think on the whole, the sector, the treasurers, the Welsh Government and Audit Wales would like to see us move closer to a timetable that was more traditional, and therefore that is where I think the compromise position of end of June, end of September ultimately gets us to. I think my understanding is that as we head towards 23, 24, the majority, or the vast majority, I think, of councils will make the end of June. But it will be a challenge. And I think in particular in Swansea's context, with some wider matters, it's particularly going to be a challenge, but maybe.
Ben, would you like to come in on this?
Yes, as I've advised committee before, it's a problem across the UK. It is also a problem in Wales, but I've been clear that I did not want to misdirect or mislead the committee that we were very late for a raft of reasons. I would go back a couple of years and remind we did hit one of those 31st of May deadlines pre-COVID, but that was in a year where we had a stable, consistent system, no major changes, no technical gubbins, fully healthy staff, long serving, no one had retired, no one went sick, no one went for other reasons. So if all of those work perfectly well and we don't end up in triple witching hour, it is not unreasonable to put the pressure on to try and deliver them as soon as possible. Clearly, as Derwin has said, it is important reputationally, and I'm not happy being 2 years on the trot, albeit there have been a number of extenuating circumstances again this year. But the Keystone COPs over the last couple of weeks has been particularly important at a personal and professional level for us, because I still wanted to be in a position, notwithstanding it's very late, to at least get an end position so you've got some control, because otherwise you very rapidly get to a position where you can have 3 or 4 years worth of books open at once and you're making decisions on 24-25 budgets when you don't know your 23-24 starting position and you've got 22-23. Some of the really extreme examples in the UK, you've still got 19-20 accounts open. We're not in that position in Wales. I still think the timelines would be incredibly challenging even if everything was working perfectly for you. And I think, as the chair has indicated, and Derwin, recognising colleagues, we've now transitioned off our old Oracle EBS system. We had to come off it. It was end of life, and it will be the first year that we are going through a closure on Oracle Fusion, and it will remain challenging. We ran this last year with agency for much of the capital accounting, which has been the common theme since we had the qualification a couple of years ago. As we've moved to transition on that, it's the technical end of it. It's an interesting part, because it's probably not the most interesting for the public, probably not the most interesting for members, but it is still important, because a 0.5% error on £2 billion is going to hit that £10 million threshold. And the Auditor General and his staff have got an obligation to test against those professional standards. So it will be really, really challenging. It is something that's been flagged by the Society of Welsh Treasurers, and we're due to meet with Audit Wales to see what we can do better with our own ultimately finite resources, because I equally recognise that if I'm late delivering, Derwin and his colleagues have lined up to do the NHS accounts normally first, and then if you land in a zone where they need a bit of downtime, you might be waiting a long period of time. So I think it's a perfectly valid question to raise. the intention is all treasurers will seek to hit it, but it does require an awful lot of things to come right. And as a final thing I'd say is, Devon also reflected upon, they are complicated accounts, they are group accounts, and they've got other entities entries in them. We have got joint ventures, and this particular year we haven't got that many joint ventures, so I won't say too much because it's, you know, it's not just us. But one of those joint ventures' own auditors, they were having discussions and their accounts position hadn't been finalised. Makes it very, very difficult for me to finalise my position and Audit Wales to finalise theirs. So there can be a whole raft of complexities that can slow it down. But clearly it is right to try and get them done as quickly as possible, because otherwise they end up being such ancient news that they're almost fish in an ornament.
Thank you,
I
Ben.
suppose just in regard to that listing, and obviously as a footnote, would it be worth looking at, obviously there's varying sizes of councils, and you know the 22 councils are different in size, therefore different in budget, different accounts, everything else, whether that should be on a tapering basis rather than all trying to meet the same deadline. That's just an observation really in that sense.
Okay, Mike, did you want to?
Yeah, I think Ben more or less answered my question. The situation isn't unique to Swansea. So as Ben said, it's right across the county in Wales. So Ben.
Thank you, Mike. Julie, did you want to come in? You're on mute, Julie.
I wanted to ask a different question, if that's all right, Chair.
Yeah.
On page 86 of the pack, you note several accounting policy changes in respect of different IAS and IFRS rules. Could you tell me what the timescales you have to adopt those by, please?
So one of the joys and delights I have with such a big pack is struggling to find it very, very rapidly. But I'm presuming most of that's around IFRS 16 and the lease arrangements, which you are quite right, Julia, are coming imminently and will be another complexity on the capital accounts. It's the leasing arrangements, I'm guessing. Was it page 84, you said?
86. But it's IAS 8, IAS 1 and IFRS practice statement, and IAS 12 and IFRS 3.
So the short answer is we will accommodate them at the point at which CIPFA publishes its accounting code of practice, because I'm obligated to follow that. It does tend to come out relatively late in the year. It's an interesting one for my professional institute because it does tend to come out, the guidance notes for practitioners are particularly useful. They do tend to come out quite late, and we do tend to work to those as a model template set of arrangements. So we will comply with them as we need to comply with them. But you're right to point out there are a number of international accounting standards and financial reporting standards that will add to the potential complexity, as the change from ISA 260 to ISA 315 for our external auditor colleagues.
Thank you. Thank you, Julie. I'm not seeing any more hands up. Oh, David.
So just one more, sorry, thank you, Chair. It was just for awareness really more than a question. In regard to paragraph 8, you mentioned the impact of the revised ISA 315, which I think alludes to a far more intensive audit of certain items. I just wondered what was the background to that? Was that through sort of other authorities' failure in some way, or what was the background to that? Thank you.
No, thank you. Yeah, so ISA 315 is one of the international standards of auditing in UK and Ireland that we have to follow. So it is a standard which we follow in Audit Wales, but the private sector also follows it. And I think it was a standard that hadn't been updated for a number of years. So it was out of date. And I think, how can I phrase it? Some of the audit failures in the private sector, I don't need to list them, I think they're quite well known, led to the standard setters going, well, it's time to revise this standard. So I don't think it's a reflection on the public sector. But of course, we have no choice but to adopt it and to follow it. And what it's required ourselves to do is to do a lot more work in the risk assessing part of the audit and going through various controls, asking Ben and his team lots and lots of questions and getting lots and lots of replies to make sure that we can demonstrate fully our total understanding of this document that is, what, 200 odd pages long. That's what the new standard has been driving at. It's the first year of adoption in 22-23. It's gone relatively smoothly, but members will recognise that when I came along a few months ago with the audit plan, the fees had to go up a little bit more than a little bit, had to go up to accommodate some of that. I suspect that those fees will have to remain at that level probably for 23-24, but thereafter, having done that work, I think we can probably see a tapering down of those fees, because I appreciate that's something which the committee and members will be very much wanting to hear and aware of. So,
Thanks very much. Thank you. Thank you.
We look forward to seeing a reduction in the fees, I'm sure. I'll keep you to that. Okay, if there's no further questions, then thank you both for coming to the meeting today. It's nice to see you in person, and thank you for making it very clear the work that's been done. If we can move on to the main item on the agenda now, then, and likewise, it's lovely to see Ben at the meeting today, and I thank you for coming in today, Ben, with all the additional pressures you've got. Can I just remind members of the Governance and Audit Committee, it's not the first time we've seen these statement of accounts. We did see a draft statement back in December 23, where we raised a number of questions around variances between years, etc. So hopefully this will be just a reflection on what's happened since December and any key points that Ben wishes for us to receive. So over to you, Ben.
Thank you, Chair. And before I refer to the accounts, and you're quite right to remind that you've had the main accounts once before, so I will only focus on the main changes. I would wish to acknowledge the work of my Audit Wales colleagues. I would describe the relationship as personally amicable as can be, given they are my regulator, but it has been professionally strained at times given the time pressures and the issues we've discussed recently. I am pleased that the Auditor General intends to issue an unqualified opinion. And I must recognise the tremendous efforts from my staff. One of the drawbacks of everything being on top of itself is the same very small team. And even for a large council, you might have a capital team of a couple of people and a treasury team of a couple of people and a valuation team of a couple of people, that it all falls on the same people, whether you're doing 22-23, prepping for 23-24, doing Oracle Fusion implementation, or setting the 24-25 budget. And they all have obligations and timelines to them. So I must acknowledge that. And it goes beyond just core finance staff. It includes staff that do not work directly for me in payroll, in other areas, accounts receivable, where I'm entirely dependent on them, as I am valuers, who are another department. As the chair has indicated, given you've had them before, I was going to whistle through a number of the changes, because you've had the auditor's report, and basically it boils down to two things. There is a reference to a £15 million provision, and there's a reference to about £40 million worth of assets revalued down. The provision was reflected twice in Cabinet papers in the current year. And frankly, if the accounts had already been signed, it would have stayed as a contingent liability at the point at which the accounts were signed. But because they're still open, it becomes a timing issue and it has been written back. I identified the figure at £15 million. I've reported it twice to Cabinet. I've taken it to scrutiny twice, and I've done it in private session with scrutiny, because there are some commercial sensitivities and legally privileged elements to that. But that requires me to get in the DeLorean time machine and reopen 22-23. So we've washed those through. And the other one is the asset valuation down, for the reasons that Derwin and Leanne have referenced in terms of the valuation methodology on depreciated replacement costs for schools. So if I draw your attention to page 35, and I will refer to the agenda pack, and there aren't many of them, but there are a few key ones that I want to draw attention to on the main accounts. And I do appreciate for such a large document, it is difficult to walk through what they are. But page 35 is the summary. When I came in December, or virtually in December, I emphasise that we boiled it down to a single page. Those reserve transfer entries were 2.2 million back in December. They're now 17.2 million. It's £15 million more, because we have had to transfer £15 million out of reserves and put them into a provision. And they're fundamentally different beasts, but they both sit on the credit side of the balance sheet. But reserves are earmarked for a purpose and are much more in my gift and members' gift to decide what to do with them. I would describe the provision as a bit more of a padlock on it. Once you've established that you've met a threshold for a provision to be made, until the events that have caused you to form that view have fully extinguished, you are kind of stuck with it in terms of my professional advice. So you see the two entries on that page, which were 2.2 million, which are now 17.2 million. So you're going to get a recurring theme from me of lots of 15 millions and lots of 40 millions. So if I draw your attention next to page 48 and page 49, see how quickly I can scroll through. Again, you've got at the bottom of page 48, you've got a draw or from reserves or a deficit on services, which was 2.2 million, 2.205 million, now 17.205 million, down 15 million pounds. And then over the page, opening general fund and HRA balances, which were 191 million pounds usable. The deficit has gone from 2 million to 17 million, a closing balance of still 170, just shy of 175 million pounds in earmarked general fund and HRA reserves, a not inconsiderable sum, even though we are a large authority in Wales. If I move over the page to page 50, you see the surplus or deficit on revaluation of property, plant and equipment. You see 31 million pounds of the approximately 40 million pounds right down there in terms of things hitting the revenue account, the comprehensive income and expenditure. When we make adjustments on the balance sheet, we don't just swap them between two entries on the balance sheet. We have to take them out, wash them through revenue and then put them back in a new place. It does add to the complexity of the walk through. And that's what my technical closing team have to work through and be satisfied and satisfy the auditors that we have made the adjustments appropriately. If I go to page 56 next in the agenda pack, which is the I've got the group movement in reserves. You will again see a movement compared to the figures you had in December of a £15 million worsening of the draw from earmarked reserves, because again, I'm transferring it to the provision. If I draw your attention next to page 58, which is the balance sheet, the eagle-eyed amongst you will have seen that the total value of assets in the first main subtotal, 1.781 billion. It was 40 million pounds higher before. There's a clue there. There's 40 million pounds worth of asset write-downs. You would expect that figure to be reduced by about 40 million pounds, and it is. And then if you go over the page onto page agenda page 59, you will see that provisions have gone from 9.305 million to 24.305 million. They've gone up the 15 million pounds once again. You'll see the note 10, the earmarked reserves have dropped by 15 million pounds. And then you will see entries in both the revaluation reserve and the capital adjustment account to take out the 40 million pound credit for the write down on the asset valuation side. So you see a relatively small number of entries that actually get affected directly as a result of the two audit recommendations, which I've accepted in full and I've implemented in full. I draw your attention next to agenda page 101 of the committee pages, and I'll give you a chance to get there. Because you can probably get there faster on paper than I can myself, scrolling through. You will see again the write down and change of the 15 million pounds in terms of reserves and provisions. I'm still struggling to get there myself. Nearly there. It proves that the pen can be mightier than the sword, or the electronic can be mightier than paper on occasions. So I draw your attention next to page 122 of the agenda pack. And again, you will see, hopefully if you've got to page 122, pause for you to get there, you will see employee benefits, long-term provisions. You will see a new entry for 15 million pounds in there, which is driving that overall switch. And you will see over the page on page 123, my disclosure that I had identified it as potentially contingent liability at the balance sheet date, but because the accounts were not signed off, I had reported it twice in year to Cabinet and have taken it through scrutiny, as I already referred to. And then at the bottom of page 123, please know you don't need to scroll over to another page, you will see that the revaluation reserve and the capital adjustment reserve have both been written down. And if you get your calculator out, it's about the 40 million pound adjustment once again to the asset valuation. So they're both big numbers. The 15 million pounds is not a surprise because it's been taken through Cabinet several times already. The 40 million pounds will feel big, but it's big against an asset balance sheet of 2 billion pounds, and a valuation assumption out by a couple of percentage points will breach every time the Auditor General's materiality threshold. And they do remain somewhat hypothetical. It's important professionally we do it to a professional standard, but I would surmise it as saying get a valuer, an accountant, an economist, and then an auditor in a room at the same time. You may have 4 different opinions as to what the exact value is, because accountancy is as much art as it is science. And some of this is super theoretical, because for specialist assets, such as schools, which are done on a depreciated replacement cost basis rather than a market valuation basis, have you actually got any intention of ever disposing of them? Does it really matter what it's carried on? At a technical level, for us as auditors and accountants, it matters. For valuers, it matters. I'm not sure it hugely matters to members or the public whether the carrying value is 2 billion or slightly less than 2 billion. They tend to be more interested in what's the cash, what's the reserves, what's the council tax increase going to be, did you make a surplus or a deficit? Not so much the esoteric debate, but they are important because we have to prepare the accounts to a professional standard. So I'm not trying to denigrate or play down the importance of a material change, but they're probably not as interesting, as exciting as some of the other things that auditors find in some councils. So that's a whistle stop through of the changes that I'm aware of that immediately draw attention to the primary statement of accounts. We are up against a relatively tight timeline. You've had this once. The intention is for me to certify this is urgent if you are so content, given this is for information, and I will be then taking it through to council next week for adoption. The prize for us is an unqualified opinion, subject to me doing the letter of representation, which is ready, and subject to council being satisfied next week, and then subject to me not knowing of any gross impediment that should cause the Auditor General to worry or me to worry on the following Monday, which is normal practice. And it would mean we would get them done and firm as a starting point, because we're about to do 23-24 closure, and it is important because you don't want 3 or 4 sets of books open at once, because otherwise you don't really know what your starting position is. So that's all I wanted to say in terms of taking you through the key changes, emphasising where they kind of fit, because these are incredibly complex documents, and where they fit and what they cause do cause challenges. And it's been undoubtedly the case that capital has been our weakness. It was the reserve split a couple of years ago that caused the qualification. We've tried to implement a new system. We're still working through that. That exposed some of the vagaries of the valuation basis, which meant effectively we had 2 slightly different bases of valuation for those depreciated replacement cost assets. And the one thing I'm never going to argue with my external audit colleagues is I can't have 2 bases of valuation internally. I can only have 1. But they do drive what look like quite material changes. I'm happy to take questions. Whether I can answer them in hundreds of pages, we'll see. So some of them might need to be follow-up answers, but I'll do my best if there are any specific questions that members wanted to draw attention to. Thank you, Chair. Not specifically for 22-23. I'm satisfied that 22-23 is robust enough and nothing has materially changed. And in terms of where the internal audit function and where the statutory governance officers have been, and you've received the draft of that, but we are now in the midst of finalising the draft for 23-24. And as Derwin and myself have alluded to, and questions from members of the committee, there will be challenges in terms of some of the uncertainties going forward, but I have nothing specifically to draw to your attention on the AGS, Chair.
Sorry, Chair, are you speaking? Because we can't hear you.
Sorry, I am speaking. Sorry, Councillor Wharton. I'm talking about the annual governance statement, and you sit on the governance group that reviews the draft copies of these. Is there anything you wish to say on this statement that's appended? I think it starts on page 157 or 180, whichever number you're looking at.
Only that we're going through the process at the moment, and I'll feed back when I've got something definitive to say.
Okay.
Thank you.
Chair, could I just clarify? Councillor Walton is absolutely right. We are going through the process for 23-24, but this is the one from effectively last year's, which I've got nothing that I need to advise on. The one that we're doing at the moment, where I sit on the same panel as Councillor Walton, is in relation to the 23-24.
Yeah.
If there was something so fundamentally material in 23-24 that caused me concern, I would be obligated to raise it to committee and obligated to raise it with the Auditor General and his representatives. But one of the things we always discuss, isn't it, Councillor Walton, on that group, is working out which year we're in, especially when we're both backward looking and forward looking, and then we're doing something which is now nearly a year past its date. So for committees, lack of avoidance of doubt, this is the governance statement for 22-23, not the one that Councillor Walton and I and others are working on at the moment for 23-24.
The annual governance statement for 22-23, I've got a couple of typos I'd just like to pick up, but I'm happy to share those with you through email, and I'd be grateful if you could consider amending. They're only minor things, but
If they're very minor, and I will look to get them over to committee tomorrow, more than happy to do that. And apologies if we've missed a couple. What normally happens is Councillor Walton is the super eagle-eyed and spots normally we've got the wrong year in one instance. So I'd be guided by yourself. I'm happy to sort them.
There's only a couple just to finalise the
Well,
document.
I'm disappointed. You mean I didn't spot them?
I'll copy you in, Councillor Walton, when I send the email to Ben.
Thank you. Thank you.
Are there any questions on the accounts that Ben addressed? David?
Thanks, Chair. I've got just a few points, really. It's more around the specifics. I'm just asking around global stuff, really, in regard to the account. So just in regard to the usable reserves that you've mentioned in the report, what's going to be the predicted trend in view of the current climate and the challenges and everything else that we mentioned earlier going forward? Thanks.
Yeah, it's an interesting one because the Auditor General does actually provide some quite useful stats that I use, which we're able to compare ourselves to others. So in the first thing I'd say is, as an authority in Wales, we've got the second highest level of earmarked reserves. Proportionately for spend, 7th highest. We are drawing down on them. A policy decision was taken by council to commit up to £40 million, £45 million for an economic recovery fund. And there is a balance on the capital equalisation reserve, which is being used to defer us doing some external borrowing. We were lucky enough to borrow most of our money at less than 2%. No one wants to go out and borrow it at 5.5% at the moment unless they have to. So we are drawing down reserves for a couple of targeted reasons. The budget just passed by council in the last week or so has also committed to draw down one of our held reserves for schools in its entirety. So the budget was set for 23-24, expecting ultimately up to about £40 million, including overspends and spends from schools being drawn down. That is clearly not sustainable. The budget set for 24-25 is down to £7 million draw. There will be an expected draw from the capital equalisation reserve for the temporary funding of capital, and there will be draws down from those reserves. I remain satisfied and certified that the reserves were adequate for both the immediate budget and likelihood of them lasting for the medium-term financial plan. Our general reserves, though, are one of the lowest proportionately, and that's the corollary of it. The outlook is undoubtedly very, very challenging for the public sector, and I've reflected before that as much as they can only be spent once, local authorities are in a fortunate position, probably a more fortunate position than the Welsh Government is in terms of its ability. The reserves are ours. We don't need Treasury consent. We don't need Welsh Government consent. And of course, the NHS doesn't have the ability to have reserves. They're funded on a year-by-year basis and have to go through some technical complexities with Welsh Government. So whilst it can always be a little bit lazy to say, well, local authorities should spend reserves, and I know you didn't ask it in that context as to how long they would last, we do equally recognise we are fortunate to be masters of our own destiny on some of these things compared to many other public bodies. And Swansea is in a relatively fortunate position compared to many, many other authorities in Wales. And certainly it seems to be the case compared to England as well. You can see where the pressure points are in the public sector. And I'm sure there are very clear reasons as to why there are pressures in some parts of the UK more than others at the moment. But the outlook remains incredibly challenging on the basis of all information and news coming out, and it's making best use of what you can. I'm still feeling a relatively fortunate position as a treasurer to be able to give advice to members with some relatively sizable chunks of money, albeit one-off, to be able to make choices locally and not be forced to do things because we've run out of flexibilities.
Thanks for that, Ben. The next point really is around the pension fund. We have had presentations in the last few months from HR and everything about, and the interesting part of that is the actual age profile of the workforce. Now, the vast majority of the workforce, or the large proportion of the workforce, is in that 50-55 plus category. And again, it's a bit twofold. This obviously there's going to be over the next 5 to 10 years a hell of a demand on that pension fund in regard to people coming up to retirement or early retirement or whatever. But equally, in regard to the younger workforce in the council, are they opting into the authority's pension scheme, or like what a lot of young people are doing now, they're opting into private schemes outside of the authority or outside of the organisation? I just see from a risk perspective, there's going to be more demand than actual income coming in regard to that pension fund going forward, again, over that 5-10 year period.
So it's an interesting one, and actually reminds me of some other bits which are also relevant to committee when I think about it. In one sense, the pension fund is delegated as a Section 101 committee to the pension fund, and their accounts were long signed by the Auditor General, but it is right that they're consolidated into our statements. And it reminds me, we are one of only 8 of the 22 authorities that's even got a pension fund that needs to put their accounts in, which is, I think, a point that you raised earlier, a valid one. There's only 8 of the 22 that have got a pension fund that needs to be accommodated in. There's only 11 of the 22 that have got to accommodate in an HRA. There's only a couple of us, of which we're one. Councillor White has declared his interest, where we have to consolidate in a joint body where we are the related party and the controlling mind in the Swansea Bay Port Health Authority. So there is that complexity. The local government pension scheme is mature, but it is also funded. And we were in the fortunate position that at the last actuarial valuation, it was 100% funded for the first time in forever, which has enabled this authority to make very, very substantial pension fund savings and has ameliorated some of the pressures. We weren't the only pension fund in that position, where returns were particularly good, but they're not likely to enable us, given where we are with the demography and returns, it will come under some degree of pressure, but it's not anywhere near as bad as much of the public sector pensions, where it is pay as you go and today's contributions pay for the pensions. It is a fully funded invested scheme with billions of pounds worth of assets. The pension fund is bigger than the council in valuation, because we don't just run it for ourselves, we run it for another council and about 20 other admitted and scheduled bodies, which does actually add to the complexity of the work that Audit Wales have to do with us compared to others. You are right. I mean, my understanding, because I am the Section 151 officer for the pension fund as well, is that there does tend to be more opting in and out and less take up routinely by the younger generation, which will raise an issue in terms of cash flow maturity. I'm less worried about it from an investment point of view, because it is a fully funded fund and we take actuarial advice. But you do see some complexities of people choosing either to be in or not in. It's just one of those things when there's a cost of living crisis and you can see the benefit of a pension versus other things, people makes their choices. And you are right, it is an aging workforce, because I'm nearly in that category too. Despite still having some hair, because some of my colleagues always say, you can't be the treasurer, you've got hair, sort of thing, but the reality is I'm in that cohort too. I'm in my 34th year of doing this. And a lot of the workforce is growing out. There isn't that much in the way of new people in, and I think it's a valid point in terms of some of those cash flow bits, but I won't probably say any more here, because the pension fund is sort of ancillary to the main accounts you've got here. All matters are delegated to the pension fund committee and board, including adopting their accounts. I think Audit has long gone on that, but they are points of interest as to the maturity profile of the average local government worker and a member of the local government pension scheme, including, as I say, my good self.
Thanks, Ben. Just the last point I've got, really. Obviously, we know about the voluntary redundancy scheme, and I presume that's carrying on year at the moment. And I just obviously wanted to know about the accrual of savings around removing those posts, obviously as part of the voluntary redundancy, and how that's been sort of categorised. Thank you. So we still do offer the scheme. It's not a particularly active offer, because we're in the fortunate position we were able to overall advise council to set a budget with relatively modest reductions in staffing. The budget proposals that went through were for up to 28 posts at risk, of which half of them were anticipated to be vacant. So there are some volunteers each year that go through. I'm still in the fortunate position that I carry a central contingency fund, and I centrally fund them, and I allow services to take the whole of the cash saving to help contribute to their savings targets. It only feels fair in the round, because the evil treasurer gives advice in the first place to members as to what cash limits to set for individual directorates, and those cash limits are challenging in an inflationary. Even though inflation's come down, the headline might have come down, but we've never been fully funded for some of those inflation pressures in the last couple of years.
and I haven't been very generous in my gifting to directorates because I haven't had much to be able to gift out. So the way we approach it is we allow departures where there is a business case. It must be evidence to pay back within the 3 years. I fund it centrally from contingency, and I have to make arrangements to neutralise the obligation if there is an early retirement element and strain on the fund. I have to settle up with the pension fund treasurer, which is fortunately myself. For me, it's not the case for some other treasurers. So that's the way we approach it. There is a danger if you don't do it that way, that it becomes a pernicious cycle. If you set a really challenging cash limit for a directorate and then they get volunteers, but they've got to fund the costs of their own departures, you end up with a sort of downward spiral. So I'm still in the fortunate position that I'm able to, at the moment, fund all requests as they come in. But I reserve the right that I might say I might run out of a magic bean pot at some point. And it's not an active guaranteed offer. It is, we're interested if people want to volunteer, and we will look at the business case if it's in the right area. In some areas, it's not the right area because it might be where the nature of the staff and such like is such that it's rare as hen's teeth type stuff, and we might struggle to replace or recruit. That in itself may not be brilliant for the individuals, you know, if they would like to go, but it's what works in the business interest and efficiency of the council. But we are in a fortunate position that at the moment I'm still able to afford those. And I'm also pleased to say that they are relatively modest in the scheme of things. When you see the budget proposals are set, other authorities have had to have much more challenging staff savings proposals compared to ourselves. And I think that's certainly the case across Wales, that they've been relatively modest compared to some of the pressures you've seen across the UK, where you've got some authorities have got themselves into really, really grave difficulty, and you're looking for active offers for hundreds and hundreds of staff. That's not the Swansea position.
Thanks, Ben. Thank you very much. Thank you.
Mike?
Thanks, Chair.
Some assurance from Mr. Roberts. Yeah, clearly, we're lucky, you know, we want to be one of the second biggest employer in Swansea, but also we encourage, with new staff with induction, and pensions is sort of promoted as a benefit they could have with, you know, being employed with the local authority. Plus the fact that we obviously have got good relations with trade unions, and trade unions obviously promote that as well when they join, obviously, to make sure that they are in the pension fund, you know, once they start employing the local authority. So we certainly are sort of want to show that we are a good, caring employer. And I'm sure whether Ben would say not, but of course, out of the sort of authorities that are in the pension pool, the others that are not are probably envious of what we got to offer in Swansea.
Thank you, Mike. It was just obviously with the younger generation really, and their options into more private schemes. But thank you.
Yeah. If there are no further questions, I'm not seeing any hands up on screen or in the room. Can I thank you once again, Ben, for coming in today to present the accounts and for fielding the questions that you had. And again, congratulations back to the team for the good results from Audit Wales. We're asked to note, so it's for information, this report is, and the Audit Wales was for noting. So do you want one final?
I just want to say thank you, Chair, for the kind comments that you've all passed on. It will be appreciated by the staff. It is appreciated personally by me. And I'm also thankful for you accommodating at short notice this special GAC. It was important to try and fit in with a certification for urgency to get to council for the right reason, to get them off the book. So my thanks to yourselves for having to convene an additional committee. So I equally want to acknowledge that. So thank you, Chair.
You're more than welcome for that, Ben. After all the work you've done to get to where you are, I think that's the last thing we could do to help to get it nailed down. The final comment from me is that I'll send you the comments on the annual governance statement. There's not that many of them, but hopefully you'll be able to accommodate. And I'll certainly copy Councillor Leslie Walton in on those as well. And that draws the meeting to an end. And thank you everyone for attending.
Thank you, Chair.
Thank you.
Thank you.
Thank you, Chair.
Thank you.